All right, everybody, welcome back to DCA Live, where we try to take down the biggest topics of what's going on in the crypto and digital asset market and try to break it down and give it into some type of bite-sized pieces. As always, I've got Ben from Into the Cryptoverse. Ben, thanks for coming back. And of course, James from Invest Answers. Gents, thanks for coming.
Some type of...
Thanks for having us.
Yeah, just making sure. Hold on. Okay, that was my echo. So today, as the title and the thumbnail suggests, we're going to take a look at our biases and just go against them and see exactly where we're at. The thing that we want to take a look at is, especially after the Jerome Powell speech, is Bitcoin going to 15K? And if it is going to 15K, what exactly are we doing? So the first thing we obviously want to take a look at is, what did Jerome Powell actually say in the Jackson Hole meeting? And I took the whole speech, which was about 8 minutes and 40 seconds or something like that, and I condensed it into about just a little over 2 minutes, just so we can take a refresher so everybody can get kind of dig in. Then we'll take a look at, do we see weakness in the market? We're talking about fear and greed, retail sentiment, and can we even take trust on-chain data? Take a look at an article. And then the big thing, I think, is what's the macro signals that are telling us that it could drop or maybe not drop? And then lastly, if 15K is a possibility, what's your plan? So the first things first, as far as my opinion of what's going on, there was an article that came out and says Powell is not about to go all Volcker on rates at Jackson Hole. Goldman's Hatzius says, and I'm not going to play it. Here was the video. I'm just going to play the video itself so everybody can kind of get deep into what he was actually saying here, and then we'll kind of dissect it as we go forward. So this is the condensed version. I linked the entire video so everybody can watch it. So let's check this out.
The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself. So part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. These lessons are guiding us as we use our tools to bring inflation down, forceful and rapid steps to moderate demand so that it comes into better alignment with supply, and to keep inflation expectations anchored. We will keep at it until we're confident the job is done.
Okay, and then just as a quick refresher, coming forward, let me get this out of here, is remember, that as he talks about this and he talks about Volcker and everything else, and it doesn't make a lot of sense of what he's talking about. I don't know if this is the right decision. That's not for me to decide. I'm just going to tell you what it is. If we take a look at the actual inflation rates from 1960 to 2020, well, 2023 doesn't exist yet, but 2022, we're going to see that what, like he talked about, over the last 15 years, inflation went up. We're talking about the 1960s, very low, 3%, just went up a little bit, 5%, came back down as I think the former Fed chair before Volcker was Burns. And people talk about like he didn't do anything. He did. He raised rates, but he just didn't raise them enough. He didn't keep his foot on the neck. And then, of course, it came down a little bit, but then just launched up. Then in 1979, Volcker was appointed the Fed chair, and that's when he made those rate hikes. So, gents, and I'll start. Ben, you're here as the first one. Let me just start with you. So what did Jerome Powell really say to you? What do you think? And then what does this mean for us as far as the broader crypto and even traditional markets?
Well, I guess I'll try to give my own perhaps ignorant interpretation of it. I feel like he's been advertising all along that the Fed will raise rates. They're going to combat inflation. You know, I think he'd rather be remembered more like Volcker was, not like some others. That doesn't necessarily mean he's going to be nearly as aggressive as Volcker was. But I mean, I think he's right in realizing that inflation could be easily continue to become entrenched for quite a long period of time if they don't actually tackle it. I mean, it was the fact that Volcker tackled it back then that led to, I think, arguably a very booming economy later on. If you just sort of let it go and you pivot and you start cutting rates the minute it starts to come back down, then you could have another period where you see inflation go right back up again, just because we're a little bit too soft on dealing with it. So I think he's been pretty clear. I think, you know, they're going to keep raising rates. I'm guessing it'll be at around 3.5% or so by the end of the year. But I think the biggest thing that the markets aren't really digesting is that they're probably not going to immediately start cutting rates is, I think, the biggest thing. And I'm not saying they're going to raise rates to like 7% or something like that, but I think that they could leave rates elevated a lot longer than a lot of people think they will. I think one of the things is we like to look back over the last 20 years and say, well, the Fed never does what they say they're going to do. Yeah, inflation hasn't been this high for 40 years. So it might be better to look to see what was going on in the 70s and in the 40s than it was, say, over the last 20 years. So my interpretation of it is that he's trying to, I think he's trying to maneuver the markets in for a soft landing, which is what he said all along. I think he's actually, I think a lot of people kind of give him some flack for stuff. I think he's actually pretty smart in the way he words things. We had a recent rally that sort of alleviated some of the pain in the market. Now today he came out a bit more hawkish. Perhaps we'll see, the market give some of those gains back. But I think he really is trying to maneuver a soft landing as best as he can, because I think he realizes that rates are they're still going to be high for quite a long period of time. And I think it's just taking investors a long time to really digest that. And that's why you see the market all over the place. Like some people think they're going to pivot. Some people think they're not. I still sit in the camp that they're not pivoting this year. And the earliest pivot could come is probably sometime mid to late 2023.
Yeah. And then before I get to James, because I know he's going to talk about GDP and how they're boxed in, I think. But what does this mean for traditional markets and crypto markets right now? And then in the next, up to the midterms and beyond, you think we're going to see, because the next meeting is September, right?
Yes.
Yeah. It's in like mid to late September is the next meeting. We have 3 more meetings left. So look, I think it's going to put some downward pressure on risk assets. It doesn't necessarily mean they have to go put in new lows. But if you actually look back to 2018, the S&P sort of had a bad first 4 or 5 months. Yeah. It then had a rally that sort of lasted through the third quarter or so. And then in the fourth quarter, it went down again and put in a slightly lower low. What was interesting is when the stock market put in a lower low, crypto put in a much lower low. Because crypto goes up a ton in a bull market, and that's why everyone flocks in. But it also is the one that gives those gains back the most in a bear market. So yeah, I think it is probably prudent for crypto investors to remain very cautious until there's a little bit more clarity with what the Fed's going to do. At the end of the day, we have all sorts of indicators and things that we can point to. But listen, at the end of the day, the Fed has to play ball with us, right? We don't want to fight the Fed. If they're taking away cheap cash, we don't have the same liquidity that we need to go on a sustained bull run. So I think for me, it basically just means there's going to still be pressure on risk assets for a while. And that's probably going to continue well into 2023. And it seems perfect because at that point, we'll hopefully be gearing up for the next Bitcoin halving in 2024 and repeating the same cycle again.
Well, let's hope so. All right. So
Yeah.
Ben, perfect. Thank you. It's pretty good. And then my man.
Well,
So how does this affect GDP?
Yeah. I can't believe I'm that predictable right now. That's right. So first of all, he read it like a really boring bedtime story. So for the audience out there, I hope you're still awake because JP was not on fire today because last year he was a completely different person. Second of all, the big thing, as you hinted on, and as Ben hinted on too, the Volcker days. Back in the 80s, when Volcker raised rates aggressively, the debt to GDP was 31%, if I recall correctly.
Mm-hmm.
And the cost of debt was 9%. He jacked it to 16.5%. And the total impact on GDP was only 2.3% of GDP. Today, it's 130% of GDP. It's a different ball game, different ball of wax. So he can't do a Volcker. Second of all, I just want to point out, everybody, everything you hear, and I don't want to sound anti-JP because he's a very smart and intelligent man, but remember, he has to also play a political game. Everything that the Fed say is BS. They said, our overarching goal is to get inflation back down to 2% or under 2%. Per Shadow Stats, real inflation has never been under 5% for the last 40 years. So out of the gate, they're speaking crap, okay? So I just want people to have that rude awakening. Be careful what you hear and these talking points, okay? Very, very important. Second of all, what's very important to note is everything is priced in. Third thing, a pivot is when the direction changes. We have 275 basis points. Many people could construe a pivot is going down in the hike. And the CME futures, actually, during his speech yesterday, because I watched this like a hawk, I think it was about 66% factored in for a 75 basis point hike in September. That fell down to 54, 56% right after the speech. So basically, you can see the markets are beginning to react to reading between the lines and reading the tea leaves of what he's trying to tell us. And I see this as huge jawboning. They are talking it down. The other thing that people aren't talking about is PCE was under expectations. And that shows you that demand destruction is working. Inflation is falling fast in the US, not in other parts of the world, because the US is energy independent. But if we look at the real estate market, it's toast. Demand destruction is definitely there. The unemployment, they talk about really strong unemployment numbers. I mean, for God's sake, read into the actual report. It's all part-time jobs. And everybody's kind of laying off right now. So again, all in all, the market has it factored in. It's all priced in. Yes, risk assets are getting hit hard right now today. Bitcoin fell down to 20,530 or something. But that was a great opportunity. I think right now it's, again, everything's priced in. Everything's been given a haircut. I see us steadily getting more data points up into September, and they'll have more armor that the fact, PMI numbers are contracting fast. Real estate, which drives 40% of the US economy, is shrinking fast. Unemployment is going to go through the roof, and they'll be forced to do 50 basis points. And after that, they can do 2 more 25s, and that's the end of it. And after that, when they see how bad the economy is from getting up to that level of a Fed funds rate of 3.5%, they will start cutting rates.
Okay.
That's what I see.
So we know, we know the economy's in trouble regardless,
Yes.
whichever way we go. If we go a soft landing or a crash landing, doesn't matter. We're going down for a bit, and that's just how it goes. So to talk about being priced in, so you're saying that in next month, September, if they raise 50 basis points, that's priced in. Would 75 and even a full
is priced in. So 75 basis points is already priced in. If they do 50, the markets will rally. And I believe they'll do 50.
Okay, so 75, nothing will change. It'll be just smooth sailing. all the way to, okay, we'll see. I hope you're right, my man. I hope you're right. So,
Okay, but there are other great clouds on the horizon, which we'll probably talk about in a little while too.
sure. So let's talk about this. Let's move on. So how are we looking at the market? Do we see weakness in the market right now? And what do the charts really show us? So I'm looking at fear and greed index, taking a look at just retail sentiment, and then we'll get to if we can trust on-chain data anymore. So what do you guys read as far as like the charts right now after that Jackson Hole? What's going on in the charts that you see is like, is this just a minor blip, or is it just is it more of a bigger catastrophe waiting? And I'll start with James, since he's up there already.
Well, looking at kind of the macro stuff like the Dixie, that shot up 1/3%, which is to be expected. You know, a lot of people are saying it could go to 120, but the type of destruction that would do to emerging markets and global macro would be very destructive. I think it has to stay under 110. Gold is falling. The 10-year is up a little bit, 2 years up a little bit. Yield curve is still inverted. And risk assets are getting hit hard. I think, you know, charts, etc. Are you talking specifically about on-chain charts or?
Oh no, just macro data, and then of course, if you're taking a look at the moving averages, the RSI. I mean, what are we looking at here?
Yeah, it was it's a ton of stuff. I think you know, as I always say, the lid on the market from going up. I did expect, you know, sometime before the elections, you know, I was hoping September will be a time where we go very much risk on. But that actually happened in August with very large gains, which a little bit has been pared back. But yesterday we shot straight back up to the S&P 4200, which is a big surprise for that to happen ahead. So I have a theory that I believe the PCE number was leaked out there in the marketplace early, and the markets front run the Powell speech today, and that's why they're breathing back a bit right now. So it's like giveth and take it away all in the same breath in the same 24-hour period, pretty much. But outside, in terms of the macro, it's definitely a nasty macro backdrop. Strong dollars killing emerging markets, like I said. Eurozone, world of hurt. PMI is contracting both in North America and in the Eurozone. Crazy inflation, other parts of the world. GDP growth domestically and abroad is at risk. And the question is, where are you going to park your money? And there's a lot of money on the sidelines. And that's what people need to look at. But there are some really, really scary things on the horizon, like nuclear games being played by Putin right now. There's some inside baseball that China is ramping up, preparing for maybe a potential invasion of you-know-where. And these are the black swan things that kind of keep us concerned. But at the same time, are you going to sit out of the markets waiting for these things to maybe happen, or let your ice cube melt away, or play in the market? That's the $1 million question for everybody.
I gotcha. So that'll be like, that actually kind of wraps up two questions in one. Ben, before I move on, I want to ask you the same question. So what do you see right now as far as, do you see weakness in the market? Do you see things retracting? And I mean, you're more of the chartologist than me, that's for sure.
I mean, like I get things wrong sometimes. So I obviously can't say for sure what's going to happen in this market. The things I do see, I see the dollar still looking relatively strong. I would not be that surprised to see it go above 110. Could it make it to 115? I think it could. You know, it's rallied quite a long ways from where it was just at the beginning of 2021. And by the way, where it bottomed in early to mid 2021 is essentially the same spot it bottomed back in 2018. This is something that I was looking at a lot in early 2021. It was actually one of the reasons why the distribution phase that we went into was somewhat surprising, just because the dollar had already started to rally. But yeah, I mean, the dollar has come from 89 or something like that all the way up to 108, 109. I do think it could take out 110, and if it does, yeah, I mean, risk assets are going to take a pretty big hit again. If you go look at things like the like if you just draw lines, connecting the prior peaks for the S&P, or if you look at say like the 200-day moving average, you can see the S&P just got rejected off of its 200-day moving average. We've seen similar things in prior pullbacks. The same thing with the NASDAQ as well. Or somewhere around there. I think the things that I keep looking at with the crypto markets are things like, of course, I know that the Bitcoin dominance hasn't really gone exactly the way I thought it would so far this year, but it is still a very similar move from what we saw in the last bear market, right? It was just the move from Ethereum arguably was delayed by 3 months. In 2018, it occurred like in April and May, where the Ethereum dominance had that final hurrah back up to 20%, 21% dominance. Ethereum's having that same type of move right now. Arguably, it's just hype going into the merge. And once the merge has kind of come and gone, as much as I like Ethereum and as much as I think it's actually the best layer one out there, and it will stand head and shoulders above a lot of its like competition, I still don't see it outperforming Bitcoin like this for too much longer. So one of the things that if you look at with the Bitcoin dominance, anytime it gets to around 40%, it's usually not a good thing. Every single time it happens, it typically means that the market is not going to go the direction that we want it to go if you're wanting it to go up. So I think that's a huge cause for concern right now. As much as people like trolling me on the Bitcoin dominance, the fact that it is back to 40% is somewhat concerning. And to also, we had the exact same move in 2018, so it's probably my own fault for not even thinking that it could occur again. So yeah, those are some of the concerning things. And then the last main thing I will point to just really quickly are things like there's plenty of indicators that say the bottom is in, right? There's plenty of indicators that say the bottom is in for Bitcoin. There's still a few that say it's not. And again, as I said before, you can have 1,000 indicators, but if the Fed doesn't play ball, it doesn't mean anything, right? The main one that I'm looking at right now are indicators like the 1-year running ROI on Bitcoin. Historically, you see it bottom at around 0.2, and right now it's sitting at 0.423. And the best time for it to bottom, the most efficient way for it to bottom would be for it to bottom 1 year after the November peak. So, that's my main worry going into the end of the year, where people say it's different this time around, from 2014 and 2018. But if you look at the market cycle ROI from the peak and you compare 2014, 2018, and 2022, we were at the exact same point, the exact same time, where we're down about 60 to 70%, and we stay in that 60 to 70% range for like 3 to 4 months. We have the final capitulation, and then we start the next cycle. I'm not saying it has to play out like that, but it's what keeps me concerned about the short-term optimism on crypto.
Gotcha. James, you want to add anything to that?
No, except, well, I was going to say something, but I don't want to make myself unpopular. But I do believe
that's okay. Joe, you're on my channel. Don't worry about it.
I do believe in more compressed cycles. So I did a video about this the other day. I think everything is kind of compressing more and more. So getting up to that 1 year after the November top, it could be a little shorter before the true bottom. That's just my only point.
Gotcha. So if we're looking, don't go ahead.
We may have already hit that true bottom too, most probably.
Let's hope so. But one of those things is like what Ben said about, is the Fed going to pivot? Doesn't look like it. Can the Fed pivot later? Yeah, I mean, maybe they could. I mean, they're gonna go up 75 basis points, you say, in September, October. I think there's another one. 50,
I believe
25.
So for the record.
So yeah, we'll see. But before we move on to the next one, and James, you kind of already touched on this. What's the fears that you have as far as the macro? I know you had talked about the wars. You had talked about the home prices. Of course, inflation. We're already talking about. Well, is there anything else in these macro events that you look at and go, this is a concern. This is what gives me pause and what makes me stop selling my house and kidneys and kids to put it all in Bitcoin?
Yeah, again, well, first of all, the global macro situation, strong dollar, as I mentioned, would really destroy emerging markets. I'm looking at PMI contracting all over the place. Inflation numbers like I have not seen in my lifetime. That's more than 5 decades. The macro backdrop, as I say, is stunningly awful. But at the same time, there's so much money in the system. And where are you going to put your money? When you have a spread, for example, in the United Kingdom between potential 18.6% inflation and 1.75% interest rates, what are people going to do with their cash? You got to make it work. And that's the problem we face here. It's a real dilemma. And we're in a macroeconomic situation that it's unprecedented. It's never happened before. And that's why you hear keywords from Jerome Powell. A couple of things he did say. I think he said, they're going to do all they can. He spoke politically, saying this hurts those that can least afford to take it, or words to that effect. It's kind of like a political talking point. He admitted the labor market is softening. Growth will slow. So it's like he's looking in a rearview mirror from 6 months ago. This was all very predictable. And I know he's going to be much more data-driven now, looking at data, but the data that they have is not only wrong, but it's also old. So they're not looking at exactly where the world is today. That's why I'm very confident when he starts looking at his 3-month-old data in September, which is flawed anyway, he'll say, uh-oh, if we continue with our foot on the gas hiking rates, we are going to destroy this economy. We're going to do a Volcker, and we can't because of the issues I meant before. So he said as well, it's going to bring pain to households, which you can't do that going into an election year for November. That's the other big thing about the U.S. situation here. Okay, Democrats are in control. Let's bring some pain to households in October 2022. That is not going to fly, I believe. So, and also going back, he did mention as well 70s. And the 70s is not an analog for today's situation. We were in an unprecedented time. But by real concerns, though, beyond all that, is the European situation, the Ukraine situation, and the stuff that China is doing right now.
China.
Yeah.
China, big factor. All right. And then Ben, I'll follow with you. Any of the big macro events that concern you besides the Fed not pivoting? Or not really?
Obviously what's going on in Ukraine, if that were to escalate into something like nuclear related, I guess that could be a big issue.
Yeah.
My background is nuclear engineering, actually, so know a little bit. But yeah, I mean, I also have sort of learned over the at least brief time that I've invested over the last decade or so that you won't ever make any money if you constantly worry about what could happen.
Right.
So, I don't really spend too much time focusing on like events like that I can't, I have no way to know when they'll occur, or maybe things like, that we worry about or that you could worry about today. Maybe they do occur, but maybe they occur in 10 years and the S&P is up another 3x by that point or something. Right. So,
yeah,
I don't spend a whole lot of time worrying about it. I think the main thing that I'm looking at is just like, when will the Fed pivot and inflation and just trying to figure out like, okay, well, what could realistically get them to lower interest rates and for us to get back on track. And I don't think we're there yet. And I think he's been pretty clear about that, like multiple times. I just think the market refuses to believe it. Yeah.
No, the market, I mean, they do refuse to actually believe those things. Then just to touch on what kind of like both you said, I mean, there's only so many things we can actually do. And then James, you touched on, like where are you going to put your money? Because there's a lot of money sloshing around. And there's this graphic I always talk about, all the world's money in markets. And this is back from in 2020. And you can see like each one of these little squares is $100 billion. And this was 2020, crypto was 244 billion. And then look at this part right here. Gold, almost 11 trillion. It's more now. Fortune 500 companies, you're looking at over 20 billion. Stock markets, trillion. Stock market's 90 trillion, money supply. This is way more in trillion. Global debt, real estate, 382 trillion, global wealth, and derivatives, a quadrillion. So the thing I always think about this is that we know there's a lot of money sloshing around, but the big question is when are these people going to, because we know that institutions are buying up more than what the retail does as far as like crypto and digital assets. The question I always have is when are they actually going to start really deploying? Because when I take a look at these factors, especially the macro, take what's going on with Jerome, Fed not pivoting. What I want to do is just wait, especially like for real estate. If I'm have a lot of money and I'm just waiting, I'm like, well, I know it's going to go down, so maybe I just won't deploy it right now. Not that it's not going to happen, just going to take a little bit of time. And that'll lead me to my last question, which is this. If 15K is a possibility, just saying it is, biases, what's your plan? So Ben, since you're up there, what do you got? If it does go to 15K or you see it start to drop, where do you want to be?
Certainly not in altcoins. I've been listening. Like I've given this warning literally all year that alts are going down against Bitcoin. And I mean, I know they've bounced in the last couple of months, but if you use that as a reference point to alts having done well, they're still down like 40, 50, 60% against Bitcoin, over the last 8 or 9 months. I think that, look, I think the altcoin, I'll just say it, like, I think the altcoin reckoning is coming. I think they're going to get absolutely wrecked against Bitcoin, and probably against the US dollar as well. And then we'll start fresh once everyone has given up on alts. If Bitcoin, listen, like it was after Bitcoin it was in that 60 to 70% range from the all-time high. That is where alts lost so much against the US dollar and against Bitcoin. That's where we are right now. I think the main thing holding the altcoin market up right now is the merge. Like, I think Ethereum, it leads the altcoin market. I think it's holding it up. I am very concerned about what comes after, like that. And by very concerned, I mean, like, don't really hold many altcoins, mainly like in the stake pools and stuff that I have, but I don't hold a lot. So I think that if you see a 15K Bitcoin, that means that alts are probably down, a lot more. And therefore, I think people should take that risk into consideration. Not that it has to play out like that.
Yeah.
If history has taught us anything, is that things don't always play out in the same way. But if it does happen, and you didn't plan for it, then you have no one else to blame but yourself, because it would have literally been the exact same thing that happened in 2014 and the exact same thing that happened in 2018. So, I'll sit here being as risk averse as ever, and we'll see. We'll see by I would say by December or January, there should be some resolve to all of this. They're either going to go down against Bitcoin or they're not. If they don't, I was wrong, and I feel like worst case scenario for me is I missed the alt USD bottom, and I deploy slightly later into it. But for me, it's just not worth the risk to have too much capital deployed into altcoins at this time. And I've said before, I do think Bitcoin is probably a lot closer to whatever its bottom is, and including the fact that the bottom could be in, right? Like it could be in. But I still think it's much closer to whatever the bottom is than a lot of its altcoin counterparts. Okay, so like it'd be interesting if the bottom is in, could it retest that bottom, and that's where alts bleed against Bitcoin? I don't know. Maybe I'm just being too stubborn and wanting to see the alt Bitcoin pairs play out how they've always played out before. And if I'm wrong, I'm wrong. But that's where I currently stand. And I do think 15K is enough of a possibility to at least merit some thought to it happening.
Yeah. And it can happen or it might not happen. I think the big thing that, Ben, you said, which was pretty good, risk. How do we play with risk? So James, that will be up to you. So if you think it goes down to 50, let's say like this, let's say that you've got your stop losses in and it goes to below 20K. Do you have a buying position open right now?
Me?
Yes.
Oh yeah, I just bought hard this morning. Actually, I YOLO'd in based on the Fed market. But that's my method. I wait for these kind of moments, and I just jump in, because I think, Ben, you said something. You nailed it. As I can't remember your exact words, but the way I would say it is, as an investor, you do not want to worry about what you cannot control. Now, the real question for everybody out there is, everything is possible. Is a 15K Bitcoin possible? Yes. But is it probable? And that is what investing is all about. You got to run your expected values, calculate your risk reward, and that's where it happens. So there's so many people out there waiting for the 3.5K, 10K, 12K, and you guys know the names of the people that keep repeating these targets over and over again. And I got people coming to me saying, "You're an idiot. I'm waiting for 3,500 all the time, or I'm waiting for 10,000. It's like, you can do whatever you want. I personally don't care. But you have to run what is probable. And this is where people fall down. So like over the last 7-8 weeks, I was taking out, say, $1,000 to $3,000 a trade with great regularity, sometimes 2, 3, 4 times a week on Bitcoin. Buy 3 Bitcoin, sell 3 Bitcoin, buy 4 Bitcoin, buy 2, sell, et cetera, et cetera. That was an extremely lucrative strategy. So don't see this market as just a sit and wait for that $10,000 bottom or $12,000 bottom, but be prepared to trade it. And also, if you are in the DCA game, this is a very good time to start stacking, as they say, stacking sats. The other thing as well, getting back to what we were saying, like the big picture, this time is different. I thought with all that happened back in May and early June, I thought everybody would flee to Bitcoin, maybe some Ethereum. But no, people are still YOLOing into very high risk altcoins. And that degen DNA is not going away. So if Bitcoin were to go to 15K, that would put Ethereum back under $1,000, which means the ETH proof of stake merge is probably going to be a massive failure, which I don't see happening either. I don't think it's going to be a mess. And I see a lot more money coming into ETH. Therefore, it is a little bit different. And that ETH move to proof of stake changes a lot of things, in my opinion, and it changes the altcoin world too. So again, a lot there to digest, but that's my take. Back to your question, is 15,000 a possibility? Yeah. Do you want to sit on the sidelines and wait for that? No. Take a third of your bag now, drop it. Buy another third if you think it's going below 20K. Set your limit order at 20K or 19,100, whatever, buy it. And then take your last third and buy it at 16K. If that's what you believe is going to happen. Otherwise, look at the upside versus the downside and make your own calculations.
Yeah. And that, of course, not financial advice. That's just what James is doing. And that's not what you have to do to be risk aversive. I got you.
I will say though, with regards to the merge, like I'm very bullish on Ethereum, and I think the transition will be great to proof of stake, but it does introduce uncertainty into a time when we know a lot of regulation is coming. So, I mean, the merge itself could be categorically a huge success in terms of what they're trying to accomplish, but it doesn't necessarily mean that the price is necessarily going to reflect that if there's sort of uncertainty as to, like, is there, will the governments bring down the hammer on things? Not that they can necessarily like stop it per se, but there could be some fear there. That's my main concern. And I think that alone could be the catalyst that sends the Bitcoin dominance. I mean, I'm going to be an old man by the time it finally goes back up, but that alone could be the catalyst that finally sends the Bitcoin dominance higher. It's just people fearful of altcoin regulation. And I mean, everything that's happened this year with regards to, Celsius Network and a lot of the other platforms, like that's going to keep people not wanting to jump right back in, I think, as quickly as they maybe would have. I don't know. Just my thought.
Yeah, I can definitely see all those. I look at both of the sides and it makes a lot of sense. I will say that as far as like the degen plays, there is a massive amount of degen investors out there. And there's nothing wrong with that. If you want to do that, just know that you're totally gambling. I think that's going to actually go away a little bit as time goes on, especially if James is right as far as like the unemployment rates going up, because if people are really doing part-time jobs, they're not gonna be able to afford that. It's gonna be crazy. And if you take a look at the electricity cost, I don't know about you, but here in Texas, mine's doubled. I know in Europe, you're looking at 5, 6, 8x, and they're looking even more so. So I think that is the amount of free money that was given by quantitative easing kind of decreases. You're gonna see less of those degen plays, and I would hope that the institutions would come in and actually buy more. The big question is, are they waiting like everybody else or not? And what James said, and Ben actually said too, these guys that are waiting for the 10K, 3K, first of all, the retail, they're not going to buy, because once it gets 10K, they're like, I'll wait to 8. And once it gets to 3, they go to 1. The ones that actually go ahead of it, just take a look and say, you know what, is Bitcoin, Ethereum, and these assets, are they cheap or are they expensive? And regardless of what you think right now, it is cheap. And I will say like this, for all the 3 opinions that I have, or the 2 opinions, thank you guys for coming on. For me, I'm caught in the middle, and I'm still dollar cost averaging, but not as much as I did before, because I don't know. I'm waiting for the midterm elections to come out. I'm waiting to see what'll happen there. I'm waiting to see if these basis points come out. But I think the big thing for me is I look at risk and think to myself, what's the riskier thing? If I don't invest or if I do invest? If I stack cash, that's good, but a little bit of SIP, a little bit of cash goes a long way to invest into something small, because in 5 years, I think it'll be good. Having said that, gents, thanks again for being on the show. I appreciate it. Now let's get into a little bit of questions, unless anybody wants to comment anything before we go on it, because there's always like a 30-second delay before I get some decent questions besides about Ben's shirt and James's new microphone. So if you guys got anything to say, go ahead and just rip it off.
I was just gonna say that even if even if you think it's gonna go down or think there's a good chance of it going down, it doesn't mean you should be completely out of the market. I think it's always good to hedge. Just because you think something's going to go a certain way doesn't mean it will. So just a reminder to hedge. Like, even though I think that things could go south, it doesn't mean I'm completely out of the market.
Well, look at James. James just bought a boatload of Bitcoin today. So,
And other things too. So not just that.
probably a bunch of Cardano or something. I get you. Okay, so here's just some basic questions. Ben, where can we find your Avalanche pool address?
I don't have one right now.
Neither do I. And
I
just
stopped running it like 6 months ago.
yeah, we just got done with ours 7 days out, and we're not going to do it again. But you can find all that information on Dan Teaches Crypto. I don't know if we should even. I'm not going to get into this question. No. Let's see. Germany's bought 1 million 9-volt batteries. Rob, do you like the shirt and microphone? I like both of them. I know James here's got a nice new microphone. He sounds pretty good. Let's give it up to James for investing so people can actually hear him.
If anybody wants a microphone, I've got the place is littered with tons of microphones. So if anybody needs one, any up and comer YouTuber wants one, drop a comment and I'll ship it to you.
Nice. Hey, how about this one? How about Tesla? Do you guys? Well, I know James, you're into Tesla, but Ben, do you get into equities a little bit? Yeah, you do.
Yeah.
Anybody? Isn't there a stock split?
Yeah, there was.
Yesterday.
There was.
There we go.
Yeah.
So what'd you guys do for that situation? Wait until after or buy before and let it ride up?
Right now, so typically before stock splits, there's what they call a pre-split run. And we had that. The post-split duck, as I call it too, was actually a lot shallower than we expected. So even in a very down market, I think Tesla is down 2%. Last time, 2 years ago, was very interesting. And after the announcement in the first 15 days, Tesla stock doubled. And then it fell 35%. And then it tripled again after that. So it's kind of Tesla's a funny beast, but again, that too is caught in this macro. I think right now the new base price for Tesla will be kind of that 270 to 300 price area, and it will be going up to 400 before year end, I reckon. Not financial advice, just the earnings are just going to be so spectacular for this company. And then they have AI Day coming, and also at the under $300 price point, it does open up to retail investors that want to buy that share or so, just to start getting a position in probably what will be the most valuable company on earth in a very short window of time.
We'll see. I hope you're right. I have a little Tesla. Hey, this is a good one. The BlackRock story, which I think was like 10 days ago or so. How will this affect the market? James, I'll start with you. Because are they doing ETFs?
They filed for one, I think, with some partner, or I just don't know what the status is on that. That'll be one option. But they're working mostly with institutional clients, and now they have the on-ramp for the institutions to actually stack Bitcoin by their partnership with Coinbase. And that's all big. But again, the type of people that are moving this money do move a little bit slowly, so don't expect it to be from one day to the next. It'll gradually creep in. But looking at some of the on-chain data up until a week ago, it looks like there was, 10,000 plus Bitcoin bags. Whale holders were growing quite a bit. It did slow down. Once we hit that 24,800, 25K level, you could see them dumping. Once we got, I think it was about $2,500 above the realized price of Bitcoin, it just fell down hard, which is typical. And that's why this is a trader's market. They're going to have a lot of chop until we get the lid off the jar, which is the Fed and the other macro backdrops. But in the meantime, trade away.
Gotcha.
And that's what BlackRock is doing too.
Yeah, Ben, same thing. BlackRock, is it going to make a difference? And it doesn't look like they're really doing too much right now, but it, like James said, it probably is a good for traders. I'm just not a trader, so it's not good for me.
I don't really think it makes much of a difference. I mean, I think it's good news for the next bull market when we have cheap liquidity and everything again, but I don't really think it makes a huge difference right now.
Hey, how about this one? What's your opinion on the Cardano upgrade for Basel? Is it gonna lead to price appreciation or not really?
You know, this is so I mean, you always have idiosyncratic risk and market risk, right? I mean, like the idiosyncratic risk on Cardano, of course, like it usually does pump into things like this, but I don't. I mean, with the market risk, I think is playing a huge role right now, like in the health of the entire asset class, right? Like, so if Bitcoin were, you know, at a healthier price point, then I think it could make a big difference. But with Bitcoin where it is today, I don't really know how much of a difference it's going to make. I mean, I still think Cardano is a good project, and I'll still hold it for the next bull market. But again, we've seen it pump into these kinds of things, and then it usually is a sell the news event. You know, this is how it was in a bull market. This is how it was in the bull market too, right? So I mean, I don't really anticipate a huge difference now as we're trying to get out of the bear market. But maybe some optimism short term, but it's not going to change I don't think it's going to change any macro directions right now.
Yeah, I don't see that. I mean, it's good for the project. I don't see the narrative. James, anything on that one?
And I did just upgrade my
Okay, cool.
Yeah.
Excellent.
I have a lot of respect. I think Charles came out last weekend, or was it last Friday, 7-8 days ago? And he was wearing his heart on his sleeve. He was venting a lot of frustrations. He's kind of throwing his hands in the air, saying there was some, you know, bad decisions made. If he had the chance to do a do-over, he would have avoided Haskell as a language, which I've been talking about for a long time. But it was nice to see him kind of fight back and be very open and honest. And from what I see, the code is ready. There's a few little things that they need to tweak before they can deploy. Yeah. So all good on that side. But I think the big thing, he did mention one other thing too, and that was what I look at too, is the adoption of the chain, daily active users. And he seemed to be a bit frustrated with that. He feels the need maybe to invest more in marketing and getting more adoption, at least reading between the lines. That's what I got from it. But it was nice to see him hit back to his haters and wear his heart in his sleeve.
Yeah, it is nice. I mean, there's no shortage of that. I can attest to that fact. Hey, here's a good question. And this is an interesting, and I know where this comes from. Is it possible that Bitcoin does not see an all-time high again? And what this comes from is there's a gentleman named Blockchain Backer. He's on YouTube. Smart guy, does a lot with TA, does a fantastic job. And he's the one that called the top, the last one. He said, I think that around 67 was the top. But he said, I don't see Bitcoin making an all-time high ever again. I believe that was his statement. I don't necessarily believe into that statement, but it is an interesting thing because he takes a look and makes his case for TA. But I'm just going to ask you guys, what do you think? And either one want to jump in, go ahead.
I mean, I'll let James go first.
Well, I look at adoption. Look at the Lightning stats. Look at the accumulation. Look at the scarcity. It's been my thesis on Bitcoin from day one. That's why I completely fell head over heels around it. Again, the more it's used, it's only a matter of time before somebody really starts to weaponize the Lightning Network to displace traditional finance. And that for me is extremely positive. And if Metcalfe's law is even a quarter right, we were going to smash through the all-time high again.
Yeah, and it's always a question of when, right? Ben, what do you got?
I mean, I look, anything's possible. That's one thing you learn with investing. I do think Bitcoin will hit a new all-time high eventually. For me, like the worst case scenario, I mean, the worst case scenario is it goes to zero, right? Like theoretically, but like the most realistic worst case scenario would be like we have a loss cycle where like if inflation is still very much entrenched for the next like 3 to 4 years, maybe we have a cycle where, you know, we bottom at 12K, 15K, we go up to 50K, but, you know, interest rates are still high. There's not really access to cheap liquidity. And we don't hit a new all-time high. I could see that happening next cycle, depending on if the macro can get better. Like I know people want the Fed to pivot. I would rather them get inflation under control so that we can get back to normal. Because if we don't, then we're just going to have to kick the can down the road and pay the price for it. So I do think we'll see a new all-time high. I mean, maybe worst case is it doesn't happen next cycle or something.
Yeah, and before I get to that question from David, there is a point, just remember this, that, I mean, Bitcoin's gone through a lot of different instances and timeframes. But if we take a look at just like the dates of U.S. recession, however you want to define that, I don't know what people are defining it these days. I thought it was 2 consecutive quarters of GDP decline, but whatever. It was created in 2009. and after the Great Recession. We've had a good decade of economic growth. Now here we are in the decline. So it'll be interesting to see if Bitcoin can get through this and wars and coronavirus and all those things. I think it'll be unbeatable. But the last question we'll start with this is, I think unless something else comes up, Ben, same thing with the ETH merge. The narrative to me, I don't see where a bunch of money is going to come in. But as we get closer, will it be increase, or you think there's going to be a buy the news, sell the rumor, or buy the rumor, sell the news?
Well, it's already been by the rumor. Ethereum is up like 2x in a relatively short period of time. So yeah, like I keep thinking to myself, like, how could it rally? Like even months after. I'm not, like, I will say this, like I feel somewhat confident, but not confident enough to not have any ether, right? So like I do have some ether in case it just goes on this like crazy rally that I'm not expecting. Like I don't want to be the guy that just didn't have any because I was so convinced that it wouldn't go up. But I'm not as heavy as I was on it back in 2020, like 2019, 2020. I was pretty heavy ETH going into the bull market in early 2021. Now I'm not nearly as heavy ether. I could see myself get, maybe like later this year, early next year or something. But I don't know. It's definitely been a buy the rumor. We'll have to figure out if it's a sell the news.
Yeah, and for me, it's the same thing. I'm just waiting. I'm really waiting till next year to see what happens. But I'm still buying a little bit along the way. James, you still buying ETH or just all Bitcoin now?
I have not bought ETH since before summer 2021. So I've been trying to lighten my load and swap it into other things that move faster. And that's been my plan. Because in full disclosure to everybody, the only two things I ever bought were Bitcoin originally, way back when, and then I started buying ETH, when I hit $100 or whatever, $90 back during the crash. It was kind of one of the things that I missed, and I waited years to jump on it again. And so now I'm just trying to lighten my ETH load, because I do believe it is, Ethereum is great. It is my second biggest crypto holding, but on a relative value perspective, I think there are other things that need to come up to have much more of that market share, at least based on transactions, based on daily active users, based on breadth of dApps, all that type of stuff.
Yeah.
And right now they're trying to change the wings on the plane, and that's causing some headache for Ethereum. Still bullish on it, still hold it, but I haven't bought it in a very long time.
Probably do well in the long run, but we'll see who's going to be the big winner. All right, everybody. So that's it for today. We're coming up on the hour. And again, gents, I appreciate you guys coming on, sharing your thoughts and opinions, and we'll go from there. So everybody, don't forget to, in the link in the description, you can find James, the Best Answers, also his Patreon. Also with Ben, you can find his YouTube channel, plus his website, app.intothecryptoverse.com. Links in the description. So that's it for today, everybody. Thanks so much for stopping by. We do appreciate it. Like and subscribe. See you on the next one.
Thanks all.